Hello and welcome. My name is Jeffrey Kennedy. I'm the editor of Futures Junctures and also the editor of Elliott Wave Junctures, and welcome to today's episode. With respect to my style of trading, I like to trade in the direction of the trend. So if the larger trend is up in a market, I like to play the buy side. If the trend is down in a market, of course, I'm looking to, say, take short positions. Now, within the move to the upside, what's very important to me is always looking for that counter trend price move that actually happens as prices move to the upside. For example, this pullback would be the opportunity to rejoin the larger trend, as is that pullback. That would also be an opportunity to rejoin the larger uptrend or the buy side. Now, in a downtrending market, I like to focus primarily on selling bounces. And again, from an Elliott Wave perspective, you could actually look at this structure here and go and say, for example, that would be waves 1, 2, 3, 4. So of course, I want to sell bounces in a downtrend. This being the case, because that's tends to be my trading style, i.e. having the wind at my back, I like to focus primarily on counter trend price moves or corrective wave patterns as my setups. Now, the most common type of corrective wave pattern consists of only 3 waves, and that would be zigzags and flats, for example. Now, over to the left here, what we have is actually a zigzag. This would be a 5, 3, 5 wave pattern, and there's primarily 3 waves here, waves 1, 2, and 3, waves A, B, and C. Okay, now a flat correction, very similar, except that wave A subdivides into 3 waves, wave B subdivides into 3 waves, and then wave C subdivides into 5 waves, but that would still be an ABC structure. That pattern there would only consist of 3 waves. So with respect to zigzags and flats, they consist only of 3 waves, identified as waves A, B, and C. Now a triangle, on the other hand, that's a 5-wave move. That move is a sideways price move. It's contained within converging trend lines, and I've done a lot of work with respect to triangles in Elliott Wave Junctures, so I'm not going to spend much time on those patterns, but that pattern there is actually identified as waves A, B, C, D, and E. There's 5 waves with respect to a triangle. Now there's another type of corrective wave pattern that I focus on primarily, and that is a 7-wave price move or a corrective combination. And I actually drew out a diagram here to the right side of this price chart here, and what we actually have is a 7-wave price move. Notice the blue numbers, 1, 2, 3, 4, 5, 6, 7. Typically, it is contained within parallel lines, a lot of overlap within the structure. Now, from an Elliott Wave perspective, we would identify this as one of 2 waves, either waves A, B, C, X, A, B, C, or simply as a W, X, Y. Now, this combination here can actually form in a number of different ways. For example, this could be, say, a double zigzag, in which case you have 5, 3, 5, and then you have your X wave, which is always 3 waves, sometimes a triangle, and then another 5, 3, 5 pattern here for a double zigzag. Or you could have a double 3, in which case the first ABC sequence is, say, a flat correction. That would be would be joined together by another X wave, a 3-wave, or a triangle, and then you would have another flat, possibly a expanded flat or just a straight flat. Now, sometimes you can also see too where you might have, say, ABCX and then a triangle actually, or a combination of possibly a zigzag or a flat, which is why we call them combinations. But the key thing to remember with respect to keeping this simple is that this move here, this combination, consists of 7 waves. That's the key thing to walk away with. Don't get too caught up in the detail, whether it's a zigzag or a flat or the X-wave triangle possibly, but just focus on that combination move, that corrective combination being a 7-wave move, and understanding that 7-wave moves indicate the same thing as a 3-wave price move, and that it is a counter-trend price move, and that it's going to be more than fully retraced. And these are your opportunities to rejoin the larger trend. For example, let's look at some real-life examples of this in action. Here is a ETF. This is an ETF of sugar. Ticker symbol is SGG. And notice from this extreme here, that late December 2011 low, the move to the upside developed within parallel lines. it was overlap. Notice the overlap within the structure, and also too, notice it consisted of 7 waves. Upon completion, and that's typically occurs whenever you have that confirmation of completion or that confirming price action I often speak about on a break of the extreme of the 6th wave within the move, that cleared the way for further selling in this market back to below the origin of the pattern. But this structure here, it was very difficult to actually identify that move as an impulse move because number one, it consisted only of 7 waves, but also the overlap. Okay, here's another example. This is in Wynn Resorts. This is a stock, ticker symbol is WYNN, and again, notice it is a 7-wave price move, waves 1, 2, 3, 4, 5, 6, 7. It is contained within parallel lines, and also again, notice the overlap with respect to the substructure. Once complete, again confirmed by a break of the extreme of wave 6, or the wave 6 point here, leads to a further complete retracement of the entire structure. Let's look at one more example here. This is the ruble. Okay, this is a currency. Notice that move here back in 2011, that whole advance. It was contained within parallel lines, and more importantly, notice the overlap within the structure to the upside, and also to notice the 1, 2, 3, 4, 5, 6, and 7. 7-wave price moves mean the same thing as a 3-wave price move, that it is a counter trend price move that we can expect it to be more than fully retraced. And what I like to look for is a break of that extreme of wave 6, or that wave 6 extreme here, as you can see here, as you can see here, and as you can see here, to confirm that the pattern is complete and ready to be more than fully retraced. Why am I kind of talking about this subject today? Well, let's look at the euro. This is a 120-minute price chart of the euro. The move to the upside is contained within parallel lines. You have 7 distinct waves, so if we can take out the extreme of the wave 6 move here, then I will be looking for this advance to be more than fully retraced as we move into the remainder of this week. Thank you very much.